Good morning and welcome to this session of the live revisionary virtual classes conducted by the Board of Studies of the Institute of Chartered Accountants of India. I think you have already undergone some inputs regarding company law. So we are going to start at the topic called Prospectus and Allotment of Securities. So you are already familiar with share capital, what it is from incorporation. So, in case there is anything to be added, I will add. Maybe after this only you'll go for share capital and debentures. But before that, I'm sure as part of your basics of incorporation, you have been taught what is share capital, authorized capital. So today, we are going to see prospectus and allotment of securities. Basically, the unique feature of the company law is that there is limited liability. The liability of the member is limited to the amount, if any, unpaid on the share or the amount guaranteed by him to be paid in the event of winding up of the company. This makes it very attractive for people to invest. So companies can take money from the public. Now, some companies may decide not to do that. They may use their own money, but form a company for the purpose of enjoying the corporate identity, separate legal entity, etc., etc. Whereas other companies, the goal might be to raise money from the public. Okay. So in this chapter 3 of the Companies Act 2013, we are going to see the provisions for issuing prospectus. So there are some elaborate provisions. We will see that. And also, after shares are applied for, the board of directors has to allotment of securities. Allotment. Feel free to ask any queries that you have in the query pad. And there is a query pad there. You can raise your queries in that. Please do not use the chat box, which I can't see. Whereas the query pad, I can see. So please do not raise any queries in the chat box. I will not be seeing the chat box. Raise all your queries in the query pad, if you have. This chapter 3 is divided into 2 parts. Part 1 is the major part, almost 25 sections, 23 to 41 sections, where we will discuss the procedure for issuing a prospectus, content of prospectus, different types of prospectus, etc. Because this being a revision class, I may concentrate on important areas, but still, I feel given the 2 sessions, I will be able to cover this topic in its completeness. We will also look at some multiple choice questions. Maybe a few exam questions could come as part of the slides which you could use. So public offer is covered here, but doesn't mean that a company will not raise money privately. Means from a limited group of people, not from the larger public, but from specified friends, relatives, contacts. So they can do that. For that, there is a strict rule, section 42, along with the rules, which states what will be the procedure for private placement. Private placement, meaning raising money not from the public, but from known circle. Doesn't mean relatives only. It could be known circle, friend of friend. Just like in Facebook, you have your friends, then you have friends of friends. So that friends of friends can also be accessed. Sometimes, if you go to your Facebook friends list, you will be surprised who that person is when they sent a request, how I made them my friend. I don't know, because I use Facebook. I think today youngsters like you will be preferring Instagram and all that. Wherever you go, the contact list, you'll be surprised to see people are there who are not in the inner circle. Inner circle, first circle, second circle is there. Beyond second circle is acquaintance. Just met him, hi. Whereas the second circle are people whom you know through somebody. You know somebody who knows him. And you know him. So such people can also be used for private placement. You can send to them also for private placement. So the bulk of the chapter, part 1, entirely is in public offer. Because it's a different subject, they have added on another part 2 with only ICAI section, single section 42. So this topic of issue of securities can be understood like this. There are 2 types of companies. You are already familiar with that. Public company, private company. Now, you are also familiar with from the definition of private company, you are aware that one of the 3 things that the private company includes in the articles of association, one of the 3 things is a prohibition for invitation, a prohibition for making any invitation to the public for subscription of shares in or debentures of the company. So private company cannot, you'll have to remember this very well, because many times students keep asking again and again, can a private company go for public issue? Can a private company go for public issue? The answer is no. Why? Because as in the articles of association of the private company says, if it violates it, then it will lose the status of private company. 1. 2. Technically, you can't go. Because to do that, you will have to go to SEBI. Now, the SEBI will not permit you to come to public issue or issue of prospectus unless such a private company, you know the procedure for that, I'm sure. As incorporation, you might have studied it. It has to convert itself into a public company by amending its articles, removing the prohibition, etc., etc. It has to convert itself into a public. Only if it is a public company, it can go for public issue or public offer. So only public company can go. Private company cannot go for public offer. Okay. The public company wants to get listed. Till the public company gets listed, it is called unlisted public company. There could be 2 types of public companies. You have listed public companies and unlisted public companies. Some of you who are very smart will argue or will think like this. Sir, there are some cases where debentures are issued by private company. Such debentures have to be listed. Correct. If you want to issue debentures, you have to get rating. For that purpose, the private company may have its debentures listed. Limited purpose, SEBI permits private companies to list their debentures. Shares, never. So, if you are making that fine distinction, I appreciate your knowledge. But at the same time, I humbly submit that don't confuse yourself. A private company cannot issue a prospectus inviting subscription for shares. Even debentures would be privately placed, but in order to get rating, they will list it on a recognized stock exchange. It is unnecessarily, you do not break your head worrying about such things. So, as a rule, public company only can issue prospectus and make a public offer. Public offers are of 3 types. The initial public offer. Hitherto, up to now, unlisted company now wants to go for offer, public offer. Such thing is called initial public offer, popularly abbreviated as IPO. So we see recently many companies are coming for IPO. They are public companies. Maybe they were private company, then got converted to public company, then functioned, then showed some good results, got valuation, and now they want to go for public offer, public issue. That's called public offer. Then you have private placement. Can you see both public and private can go for private placement? Public company can also go for private placement. A public company may not want to go to for listing. The listing is A, costly, B, complicated, troublesome. Therefore, even public company may decide to be unlisted, in which case it may want to raise further capital. For that, it can go for private placement. In addition to under public offer, you see two more abbreviations. FPO, that is further public offer, further issue of shares. Further, already I have gone for IPO. My shares are listed on a recognized stock exchange, and it is traded. Now I want for more money, so I go for further public offer. Okay, or one more possibility is offer for sale. Offer for sale. See, we formed the company 15 years ago. The promoters formed the company 15 years ago, ran the company well. Huge profits are there. They have given themselves bonus shares. So their equity quota is pretty high, much more than the amount required by SEBI. SEBI wants only 20% as promoters' contribution. So these people are having 50% stake in the business. They want to divest. So when the company goes public, they will not only issue fresh shares as part of the IPO. They will not only issue fresh shares as part of the IPO, but also the promoter group, maybe employees, promoters and all that, will offer a portion of their shares to the public. Offer for sale. We'll be seeing this. There's a separate section for this. Offer for sale. OFS. Sometimes in many IPOs, there will be a combination of IPO and OFS. The prospectus issued for IPO would be applicable to OFS also, except that for OFS, the promoters would be selling some of their shares. It will be transparently disclosed who is selling, how much, so that the public, instead of public subscribing for fresh shares, they can purchase the shares from the promoter. Nothing, it's all the same. He will get it at the same price only. Whatever price band has been fixed for the IPO, same price band will be applicable for OFS also. So OFS will not be a separate deal. It will be the same. So then in addition to this, companies also issue rights shares. An unlisted company or even a listed company, instead of going for further public offer, may go to its existing shareholders. In fact, you will see when you come to share capital and debentures that this rights issue is a legal right of the existing shareholders. Before the company can approach strangers, public, first offer should be given to the existing shareholders, or the existing shareholders should pass a special resolution proving the board to offer these shares to other people. If that is not there, then compulsorily they have to go for rights issue, which means each existing shareholder will be entitled to subscribe for shares in proportion to his shareholding. How many ever share he is having, in proportion, he will get additional offer, sometimes at a better price than the market price. So not a discount, slightly better price than market price. So sometimes, for example, when Reliance Industries in 2020, they came for a rights issue, the price was slightly better than the market price. Market price was quoting at, I think, 1,400 or something. When they gave it at 1,200, so the difference was there. So that difference will be easily plugged. It's not a big deal, but rights issues there. In addition to that, when a company makes huge profits, it lies in the reserves and surplus as general reserve or balance in the profit and loss. Now, such a company may want to capitalize its reserves, capitalization of reserves, simply kicking it up. the journal entry is obviously very simple now. General reserve is already credit balance, P&L credit balance. So general reserve account data, P&L account data. So post that to that extent. To share capital. That's all. Okay. So this is regarding bonus issue. You will study more about rights and bonus in the next chapter. In this chapter, we are mainly concerned with IPO, FPO, OFS, and private placement. These are the topics for today's class. Mainly IPO, that is public offer prospectus. FPO, actually FPO, Companies Act doesn't deal with it. I'll show you. Once you go out, your shares are listed, such a company, it will be directly under the control of the SEBI. Thereafter, MCA will have only peripheral control. Peripheral, I'm using unavoidably long words in English. I'm trying my best to use Asan English, simple English, so that even somebody who is not able to understand English, I can understand you. There are some among you who are not proficient in English. For your sake, I'm using simple English, Asan English. I can speak thoda Hindi. I am not fluent to conduct the class in Hindi. That is not my mother tongue. Thoda. I can add a few words here and there to give you a comfort feeling. But beyond that, I cannot. So I know it's difficult for you to understand English. So slightly, I'm going for a lowered vocabulary. So I use the word peripheral. That means in the side role, not main role. SEBI will play main role. Whereas MCA, once a listed company, MCA still has a role. So long as it's a company, it will come under the MCA. But by and large, compliance will be SEBI, which is why in many guidelines, in many rules of, in the many rules and etc., they will very clearly say, the section itself will say, if you are a listed company, follow SEBI guideline. For buyback especially, buyback, if it is an unlisted company, MCA rules are there. If it is a listed company, follow SEBI. Sweat equity, follow SEBI. ESOP, follow SEBI. So wherever they relating to shares, if it is a listed company, straight away SEBI will be taking over. Okay. Friends, I'm not seeing any questions in the query pad. Why don't you make a noise there? Something, so that I will know that I'm in the right place. I'm worried whether I'm in the wrong query pad. Okay. So usually one message will be put by the technical team. That is also not here. So kindly help me out there. Make a noise, show that somebody is there out there listening to what I'm saying. So this is as far as analysis of this section is concerned. Private placement rights and bonus are common for both public and private, whereas only public company can issue prospectus for subscription of securities. The term security is not very important from exam point of view, but still the definition is there. Companies Act directs you to section 2H of the Securities Contracts Regulation Act. Securities Contracts Regulation Act, SCRA as we call it. SCRA deals with listing of securities, formation of stock exchanges, how a stock exchange should be running, control of stock exchanges, all that is given in the Securities Contract Regulation Act. Once you study corporate law, you will have three laws hinging together. Companies Act, SEBI Act, and more than SEBI Act, the SEBI regulations and guidelines are there. They are more important. Act is also there. The Securities and Exchange Code of that you will study when you come to final. SCRA has been scrapped. It means it is there, but it is not in your syllabus. It was there. No, it's not. These three enactments together form the basic framework of corporate law, as we know it. Corporate laws. Okay. So, of course, for your intermediate level, SEBI is just knowledge. You should know that there is something called SEBI. That's all. Which controls listed companies. Right? So, security is widely defined. The word security is widely defined it says, includes, which means this is a list. It is only an indicative list. There could be other type of securities that are not covered, but which also, if they are coming, it's not a definition. This is only a list of items. They have not defined a security. But basically, what is a security? Friends, are you able to access the query pad? Kindly check, because nobody is putting any message there. Seriously, because then if you put message, no, it will be interactive. For example, I can ask you a question. You can give me an answer on the query pad. I will know that you are reacting. It makes the class a little more fun, if you so desire. Mr. Abhijit Chaudhary, you cannot talk to me in the Zoom. You have raised your hand. Kindly put your query in the query pad. Abhijit ji, there is something called the query pad, in which you can put. I don't think you can unmute and talk. I think you are all muted. Okay. Also, my suggestion, put the queries in the query pad, so that whenever I'm stopping, I will go there and answer the queries. That's how I normally do. Right from 2020, when we started this online classes, I have been teaching this subject. That is how we work. It works well. And I found students becoming very interactive on the query pad. Why don't one or two of you just put something there? Hi, good morning, something. Anything, any comment. Okay. Okay. So I don't want to waste your time with this. It's a list is there. Shares, scripts, bonds, etc. Stocks, derivatives. I will not talk about stocks. The faculty who teaches share capital and debentures will teach you what is stock, debenture stock and all that. Don't worry. Script is the term used in the stock market for shares. When I buy Reliance, I don't call it Reliance share. Sometimes we call it script. What script are you buying? Reliance. The word script is a synonym for share. You can use it interchangeably. In the stock market, we use the word scripts. Okay. Derivatives, collective investment scheme, units of mutual fund, security resident under the surface, all are securities. ULIPs are not securities. Okay. And any special purpose distinct entity, ownership certificates for the investor, that is covered. Government securities, bonds, government bonds, such other instruments as may be declared by central government. Right or interest in securities. When you are entitled to buy shares as part of a rights issue, that right to buy, that itself can be traded on the stock exchange. When Reliance Industries went for the rights issue, the rights were traded for a short window. See, the right will be traded only so long as the right is there. So there will be an expiry date for the rights offer, before which you have to give your application for the right shares. So till that date, the right can be sold. Then after that, the right itself is gone. So that's it. Till such time, the right to buy will have a valuation, and you can buy and sell it. In fact, when Reliance Industries came out with the rights issue, I was a shareholder. I sold my right, which means what? I can't buy the right shares. Somebody else purchased the right from me and they got the share. Why will I do that? Because I found that if I sell the right, the market price of the share was going low. Surprisingly, it was going lower. So they were offering the rights at one price now. Now, if I buy it at the market price and I sell my rights, from the market price of the share, I can reduce the rights amount I'm getting now. Suppose market price is 1,400. I am getting 300 rupees for the rights. Then my actual purchase price is only 1,400 minus 300, 1,100. Whereas the market, they were offering the shares at 1,200, 1,300, which means straight away I got $200 benefit there by simply selling the right and buying the share in the market. Right. So That way it was better than applying for the rights. If I apply for the rights, I get 200 rupees less. It was, then of course, later on it went to 1,700. Which point in time I sold it. That was the mistake I made. Otherwise, so I kept it now. It's about 2,900 rupees now. Reliance. Anyway, so right can also be sold. Right. Friends, are you able to hear me? Are you listening to me? Can you not put something in the query pad? I'm requesting you to put something in the query pad. Anything, any comment, message, just to know that I think this is becoming a little bit of a problem. Sir, students are raising the hand, sir. What do we do? See, can you talk to me? I don't think you can't unmute yourself and talk to me. Instead, there is a query pad. Would you like to comment, give your query in that? Any problem in doing that? Chat box also is not working. Anybody from technical here? Can you help me? The query pad is there, and I'm not getting queries in the query pad. Can you educate the students on the query pad? No query pad? I can't see the chat box, boss. Okay, in case, no, can they not use the query pad? Whatever, let me continue with my lecture. If you have queries now, I think you have to put it in the chat box. Query pad is not working, you put it in the chat box. But I will see it later. When I reach a certain point in my lecture, I will see it. So don't expect answer immediately. So we are having a definition of the word prospectus in 2 subsection 70 of the Companies Act. 2 subsection 70. The definition of prospectus is any document issued or described as such. So I'm sure when you went for admission to a college, they give you a prospectus, right? Basically, a prospectus is a document that gives facts about that college, what a good college it is, what are the facilities available, sports facility, laboratory, library, faculty. They'll give a list of very senior professors who are teaching, so that the student is induced, the student is made to desire to become a student of that college. Am I correct? So that's called prospectus. Any document which gives information with a view to inducing somebody to buy something, or ideally to join somewhere, or to subscribe for shares. Such a document is called prospectus. I'm giving my normal English meaning, but the Act, the Companies Act, defines it like this. Prospectus means any document issued or described as such. So if you call it a prospectus, it is a prospectus. It includes red herring prospectus. क्या है red herring prospectus? बाद में बोले. I'll tell in another 20 minutes. You will have no problem about understanding what is a red herring prospectus. Don't worry about that. I will tell you. Also, it includes a shelf prospectus. These 2 types of prospectus are discussed in the respective sections we have mentioned, section 32 and section 31, which we will discuss. Prospectus includes any notice or circular or advertisement or other document inviting offer from public. So any document issued or described as such includes red herring prospectus, includes shelf prospectus, and includes any notice, circular, advertisement. See, suppose the promoters of Dubakur Limited want to make up IPO. They want to go for a prospectus. If you give them an opportunity to draft the prospectus, what they will do? Either they will tell something false, misleading, or they will fail to tell something that is negative. That is more important. They may not tell something positive, lie. They may tell something which is good, but they will not tell something which is extremely bad and risky. That part they won't tell. So, if the promoters are drafting the prospectus, they will be doing it in such a way that without telling a falsehood, they will mislead. Am I correct? So, but they will hide also, conceal. So, in order to prevent that, the law has prescribed a format of prospectus. So, if you call it a prospectus, it should be in the format given in section 25. That's all. So, if you any notice, circular, advertisement, which has the impact of inviting offer for shares from the public, such a document has to comply with the format given in the law. This is the sum and substance of this chapter. Because if the promoters are not restricted in this way, they will do anything. There is no end to the type of fictional notes that owners of companies can write about their companies. The fond imagination of an owner cannot be included in the prospectus. The harsh reality, especially financial data, needs to be given. Recently, one company, startup as usual within quotes, they wanted some funding. So through another consultant friend of mine, they came to me because they wanted me to recommend or refer to some HNIs that I have in my network. So I said, I'll do that. So they came and they sent what is popularly known as a deck, which is nothing but fiction. 200% fictional statements are made in these decks. If only the deck, actually, technically speaking, they should bring some kind of a regulation on these decks because they create what is known as a deck. Tell anything and everything without factual support. And if you ask too many questions on the deck, they get angry. You are Buddha. You don't understand startup environment. Any lie can be told. That is not, I don't think, because it's a startup, you can tell lies. I don't think so. You have to tell the truth. What is possible, what is not possible. And if you ask what is the revenue model, they'll get angry. Please don't ask like that revenue model and all. It will come later. Right now, idea. Only idea. Okay. That way, there are so many people in the India with idea. If every idea is to be funded, where is them? So, that is, of course, the view expressed herein is the view of the faculty, not the view of the Board of Studies. Of course, faculty who is a practicing chartered accountant with 35 plus years of experience in practice has signed more than 3,000, 4,000 balance sheets and so a partner of a leading firm in Chennai from one of the mid-tier firms in Chennai. So my view, I have seen so much. Why I'm telling, I told these people, right, boss, the deck is good. I love it. Very beautifully made design. Artwork is excellent. All that is nice. Transitioning is beautiful. All that is there. But can you give me financials? Can I have financials? At least 2 years financials. We'll give you. Tomorrow we'll give you. Day after tomorrow I'll give you. Still it is yet to come. And the promoter keeps on calling me and asking, sir, any development? I said, what development? You sent me your financial. Sir, That is, what is that? After money, before money, something, some dialogue and all I was giving. Sir, after money, stake would be 20%. They have to give 15 lakhs. I said, before money, after money, before all that, you give me your financials. Only then we can proceed. Are you able to understand the problem here? Even the option, they will cheat, tell lies, not show. Therefore, to ensure that the truth is coming out, the law is very strict. The prospectus should be in the format given in the law. I'll come to that and then come back. The prospectus should be in the format given in section 25. Sorry. Okay, section 25. The format of the prospectus is designed by SEBI. You have to comply with it. So, and the date is very important. The date indicated on the prospectus shall be deemed to be the date of the prospectus. The prospectus not to be issued unless a signed copy has been filed with the registrar for registration. Of course, today it is not physically signed, it is digitally signed. It's okay. So long as each director's SIN and DSC should be there. Any prospective director also, his DSC should be used. So that tomorrow he cannot say, I didn't know about it. Everybody should sign. And it has to be filed with the registrar for registration. Okay. You cannot issue unless it is registered. Every person named as a director or proposed director should sign. Very, very important. Because in the prospectus, you will put Shah Rukh Khan as a director. Maybe you talk to him, maybe you know him well, and even casually when you met him at the club, you said, Shah Rukh, why don't you become a director of my proposed company for manufacturing sports goods or what it is? And he said, it's okay, bye, do it. Let's just smile and go off. Maybe he also might have intended to be, but he might not have taken it seriously. Then you include Shah Rukh Khan in the prospectus as one of the prospective directors, proposed directors. Obviously, if I am an ordinary Aam Aadmi like me, when I see Shah Rukh Khan is a director, immediately I'll go, I should also become a member of this company. I will buy. So, in a way, without Shah Rukh Khan's name there, I would not have subscribed. So, Mr. Shah Rukh Khan should also sign. He is a proposed director named in the prospectus. Then he has to sign. So, when you go to Shah Rukh's house in Mumbai and he say, well, maybe in Dubai you have to go, and Shah Rukh, you have to sign. What is this signing? Talk to my manager. And then manager will take, then you understand, you have to remove Shah Rukh Khan's name from the prospectus. Okay. This is meant to protect investor, ordinary people like me, ignorant people like me, who don't, you are all aware of the subject. You people are all highly financially genius. I am an ordinary person. I don't know anything. For me, who will protect me from my own ignorance and greed? Okay. Law has to protect me. So all the information has to be provided in the prospectus. Whether I will read it, I don't know. Whether I can understand it, I don't know. But it will be given. It's available to me. The registrar not to register unless all compliances are over and all persons named in the prospectus have filed their consent. Similarly, there could be a guy who is stated as an expert. An expert includes an engineer, a valuer, a chartered accountant like you, a company secretary, a cost accountant, any other person who has the power or authority to issue a certificate in pursuance of any law. So, valuation is a very, very important aspect of public issue because the share has to be valued, assets are to be valued, so on and so forth. So, under the Companies Act framework, later on, when you come to final, you will learn that there are registered valuers. Whatever it is, they are experts. If they give an expert opinion or valuation or whatever it is, the certificate, for example, you as a chartered accountant, you may be asked to give your opinion on income tax applicability, taxation. So in the prospectus, there will be one area where taxation will be covered. To that extent, you would have given your opinion. They would have included it in the prospectus, in which case you are an expert and your consent has to be obtained. The consent has to be obtained. Expert should not be a person who is engaged or interested, who is not and has not been engaged or interested in the formation promotion management of the company. So he should not be involved as a promoter. Promoter himself cannot become an expert. He may be an expert, but he cannot give an opinion as an expert. Okay. Expert to give consent in writing, and expert not to withdraw consent until delivery of prospectus for registration. So on the date of, once the prospectus is registered, it is issued, then expert is also liable, because till the date of registration you are there. Now after the prospectus is issued and you find that there is a mistake, you cannot withdraw. Okay. So the idea is to ensure independence of the expert and protect the interest of the prospective investors. See, usually when I start my company law lectures, I show one diagram. The diagram say we'll have two pillars. Okay, two pillars. One is creditor protection. The other is investor protection. These are the two pillars on which the company law stands. Two pillars. Okay. There's a third pillar which is called public interest, which is governed by the central government decides. But almost every section, operative section of the Companies Act has one of these goals. As you are studying company law or revising company law now, try to go through the provisions with this point of view. Does this section protect the investor or does it protect the creditor? So you will find this particular section 26 protects the investor, not the existing shareholder, the prospective investor, any person who wants to become a member. It is protecting him. So the word investor is wide enough to include both people who are already invested shareholders and prospective investors, people who are minded to have relationship with the company by subscribing for its shares. So it should be dated, it should be signed, it shall state all the information and set out reports as specified by SEBI. So SEBI guidelines, you will find the prospectus format is there, very elaborate format. In that format only you have to prepare. Okay. In fact, there is one peculiar relationship, you take the prospectus for registration to the registrar, right? The registrar is nothing but your ROC, the registrar of companies. Okay. In addition to that, you should also present it to SEBI. Now, the registrar will not register unless SEBI gives its in principle approval. Be very, very careful. SEBI does not approve the prospectus. SEBI has nothing to do with it. Simply look at it, make comments, give you opportunity to rectify, put in risk factor, or sometimes they might reject the prospectus itself as not supported by factual data. That is why when you go for a public issue, you will engage an efficient and effective merchant banker who will be the manager to the issue. That fellow's job to see to it that SEBI clears it. So he will be an expert in SEBI guidelines and he will see to it that the reports are given correctly. Even if there are some negatives, he will report it, but in such a way that nobody will notice it. Then SEBI will say, hey, no, you be more specific on what you are telling. You say that this is the problem, then tell it clearly. Don't use euphemism. Don't use words that are meant to reduce the impact. Also, it shall contain a declaration as to compliance with Companies Act and a statement that there is nothing in contradiction to the Companies Act, SCRA and SEBI. You notice the three triumvirate. These three enactments are together controlling corporate law, especially public issue listed companies. So Companies Act, SCRA and SEBI Act and rules and regulations made there and there. So I have to give a declaration. It should also have a statement regarding consent of expert under section 26. Shall state that the prospectus has been delivered on the cover page. And it shall state the documents to be attached. Everything should be given in the cover page. There are two exceptions regarding the format of the prospectus. See, the issue of prospectus form of application to existing members or debenture holders, whether there is a right to renounce or not. So when you go for a rights issue, existing members only are getting it, then you need not comply with provisions as to prospectus. Similarly, where the shares are already quoted or dealt on a recognized stock exchange, the shares are already quoted or dealt with on a recognized stock exchange. Such a case, you are going for a further public offer, in which case 26 will not apply to you. Please understand. Please understand. 26 will not apply to you. That's all. Why? Because you are a listed company, Baba. You are directly coming under SEBI control. SEBI will take care of you. That's why we MCA lets you go. He said, don't comply with 26 does not apply to you. 26.2 says 26.1 does not apply. Agreed. Doesn't mean he can go scot-free naked. No. He is going to be thoroughly controlled by SEBI. Further public offer, no? Because shares are, which are to be issued, are in all respects uniform with existing shares being quoted or dealt on a recognized stock exchange. In other words, shares of a listed company, you are going for further public offer, in which case, or an offer for sale, in which case, you need not comply with 26, but you have to comply with SEBI guidelines. Okay. SEBI guidelines are not exempted. You don't have to come to me, means to MCA. You go there to elder brother and he will take care of you. SEBI will take care of you. That's all. Okay. So I hope you understood, because many times I have noticed in class, in this part, many students don't understand. That's why I've given a little more elaborate explanation. If you don't, you can pick it up. Let us see if any chat queries are there. Any chat. Let's see. Okay, you put it in the chat. If you have any query, please put your message in the chat. Om Krishna Om Gupta. No, it's okay. Even if you don't have a query pad, you can put your queries in. Can you please explain point 2 again? That's all. No problem. I'll explain to you. I suppose by point 2, you mean this point. I wish you could come through the query pad. Query pad is a fantastic tool. I don't know why you are not able to use the query pad. Seriously, sorry to say this. So, second point. Ayushiji, you have to listen to me. I can't explain one more time. This is the second time I'm explaining. See, this is the second point, right? You are talking about this point. This company already listed. Such a company going for further issue of shares, which are those shares to be issued, which are related to shares or debentures, which are or ought to be in all respects uniform, the same as existing shares, which are quoted or dealt. So already for going for IPO, the company has complied with prospectus requirement. So now you are now a listed company. You are coming under the control of SEBI. Therefore, see, these two provisions, Section 26 does not apply. Section 26 not apply. Exception. So, in those cases, they say where you have already gone for public issue, you are already listed, these shares are going to be similar, same as existing shares which are quoted or dealt. No need to comply with 26. Registration with the registrar, all that, nothing. You go to your boss, which is SEBI, fall at his feet, he will take care. Format, see the format, etc. has to be complied with as per SEBI norm, as per SEBI requirement. But you need not get it registered with the registrar. From now on, your control is no longer MCA. You are listed company. Go there, go to SEBI. That's what it means. I have done my best to explain to you. This is the best explanation I can give for this point. But very surprisingly, Students invariably have a problem here. I don't know why. And invariably, one student at least will say, we explain it again, which has been told by my good friend Aishi. I hope you got the clarity. Thank you, Ji. Thank you, Aishi. Ayushi Mehta. Thank you. Thank you. Thank you. Moving on. Prospectus, once it is registered, once it is delivered for registration, it should be issued within 90 days. After 90 days, expiry date. Over. That expiry date is very, very important, no? You know, for a chartered accountant, there is no expiry date. Do you know that? I'm not joking. For a chartered accountant, there is no expiry date. Once you become a member of the institute, no, for other people, retirement. If you work in government, you have to retire. If you work in private sector also, to some extent, at one stage, you have to retire. Okay, they will send you out. Once you become Buddha, that expiry date will come. But for CA, no, in practice, no expiry date. I'm not joking. My father, 88 years old, still practicing, still active. He's got about 50 clients. When he semi-retirement, he gave almost all his 300 files to the firm, and he made us, my existing 400 files together. I'm managing now with about 4 partners. But the point I'm making is, when he quit, he took 50 files with him and set up his own small office at home, and he runs it. No expiry date. Okay, no expiry date. And something very funny. You have to think about it. Of course, if you join a private sector and you put a lot of stress on yourself to earn crores and crores, around 45, 50, you will have midlife crisis and you will have stress, all that, and you will be eagerly waiting for 58. By then, you want to earn money and settle down, and you will retire. At 60, you will be retired. But remember, in practice, especially if those of us who keep ourselves intellectually active, no expiry date. You keep on going. Okay, I'm telling this not to hurt you or irritate you, but to give you another perspective. See, think about it. You are all young. I am old. That is one way of looking at it. Another way of looking at it. All of us are climbing a mountain. You are now 200 feet. I am at 1,200 feet. I have climbed. I'm standing in the 1,200 feet and looking at the surrounding area. You are looking at it from 800. Don't mistake me. Just another perspective on life. Always we think old people, Buddha, like that. Buddha is there. Young people active. So what has happened here? Because of time, once I told it to a young boy whose father came to me. We were all traveling to Sabarimala, where the father told me to give some, whatever call advice to that boy. I said, I can't advise. That is the last thing I'll do. Then I gave him this example. I said, when we were climbing Sabarimala, Neelimala, we were climbing. At one point in time, you were all standing at 200 above me. I was standing below. Do you get a better view? Yeah, I got a better view of Pandamalai and all. Correct. So when I came there only, I can get that view, no? Till such time, I don't have that view, no? So that is the difference between experience and inexperience. So of course, qualification-wise, all of us are same. Once you qualify, you'll be C, I'll be C. But that extra 25 years height, but then that 25 years, there must have been acquisition of knowledge and experience. Otherwise, just going to the office, passing payment clearing, routine work, then nothing. Of course, again, many of the views expressed by me are views expressed by me, possibly unnecessarily, but still a senior member, a teacher since 1992. I have been teaching company law since 1992 at SIRC and from BOS since 2020, thanks to the good officers of the Board of Studies members. I have been able to interact with students and share some of my knowledge. I have written a book on company law for final, old syllabus. 1956 law, I wrote a book, Corporate and Allied Laws, which was published by Snow White. Now I have not written up. With the 2013 Act, somehow I was thinking. Again in 2020, the institute called me. Rather, I expressed my intention and they called me. They said, you take class. So I am taking. I wanted to quit teaching in 2012. And I was also a corporate trainer, very active corporate trainer. Therefore, corporate training, I was earning well, in addition to my practice. So teaching became something I had to let go. 2012, I stopped teaching. Then again, pandemic and all that, and global financial recession. So training, I come back to teaching. I love teaching. So luckily, online classes are there. So this is a penalty provision. Sometimes they ask you penalties also. Generally, what I tell students ask me 3 questions. In my classes, students ask me 3 questions. One question they ask is, sir, should I write section number, sir? Second thing, should I remember penalty provision? Third, should I remember case laws? Penalty, yes, because sometimes they ask you specifically what is the penalty. My best suggestion is, as you revise the portions, every section or group of sections, compliance sections, there will be a penal clause. You prepare an Excel spreadsheet, section-wise, what is the nature of the penalty. You will find, as you prepare the chart, there will be a lot of identical fellows will be there. Then you take them together, so that a series of 10 sections will have same penalty. Try to remember them. That way you'll be able to remember penalties. This is my humble suggestion. I know it is not a good idea because I'm asking you to do some more work. I wish I could give you some easy method by which all you have to do is lie down on the bed. Everything will come to you. I wish something. In fact, I think some scientists in Bangalore in a startup, they are trying to invent a method by which they can put a hole in the head, in the cranium, and slightly go into the left hemisphere, and then some method of chemical interaction, they will convert entire company law syllabus into liquid, and that liquid will be poured into the brain. Then cork will be joke. Okay, you should be sportive enough to take a joke. Don't be serious. Nowhere in the code of conduct, I read the code of conduct fully. Nowhere it says chartered accountant should not be humorous. Chartered accountant should always be serious. No. It says you can be humorous, you can joke, you can think differently. Nothing will prevent you. You can be creative, you can be an artist. I'm a watercolorist myself. Everything is allowed for you. You can be a photographer. Everything is allowed to a chartered accountant. Only ethical behavior you have to ensure. And ensure that while talking to a client, you maintain certain decorum of your knowledge and provision. Don't behave like a child. That's all. Other than that, I'm a human being, you're a human being. So joke. Don't take it. So in the exam hall, you go there. So company law exam, remove this card. Management and accounting and strategic financial management, this card. Just remove it. What to do? Everything will come. Not possible, sir. It is possible. I have done it in the exam. In the intermediate exam, I'm an All India rank holder. All India 27th. Final exam of the CA Institute, All India 38th rank, 38. ACS All India 4th rank. ACS final All India 10th rank. It is possible. But the method is constant study, taking notes. You do what I'm saying. Prepare an Excel spreadsheet for penalties. As you prepare it, your knowledge will improve. You will become hands-on on penalties. At one stage, you will become authority on penalty of company law. You will say, sir, 26 for the company, it's a fine of 50,000 rupees up to 3 lakhs, sir. Minimum 50,000, maximum 3. Any person knowingly a party to issue a prospectus. This usually you'll find every officer in default. Usually you'll find every officer in default. Here, no. It says any person knowingly a party to the issue of prospectus, including expert. Everybody, not luckily, no jail, only fine. The earlier jail was, they removed that. You see, recently, I think in 2017 or 18, they decriminalized the Companies Act. 17 or 18, sorry, 23 or so, 22, I think. 22 or 23, they decriminalized the Companies Act, meaning they took away the penalty by way of imprisonment in many of the sections. Because, after all, this is an economic offense. Why put him in jail? Fine him 50,000 up to 3 lakhs. So, try to prepare this chart. Slowly, you will find there are many common penalties. Then try to combine them into one sheet. By the time you finish this sheet now, you'll have a fantastic knowledge of penalty. Regarding section numbers, should I quote or not? Answer, no need. If you write the content correctly, should I write the content exactly as it is given in the law? It will be nice if you can do that. But if you are not able to memorize it that way, at least in Asan English or Asan Hindi, simple English, you should be able to write the essence of it. But that is where, when you write in your own words, sometimes you could misinterpret. Therefore, Humble request. Important areas of the provisions, try to remember it as it is given in the Act. As it is given in the Act. Many times, many company secretaries have come to me and have given wrong opinion. I will hug them and make them feel comfortable and then tell them, please read the BAR Act, my dear friend. No, Mr. Srikanth, I am company secretary. Agreed, you are a company secretary. I am ordinary chartered accountant. Still, why don't you read the BAR Act and then tell me? Then, okay, they will read. Sir, it is not like, boss, now you tell me whether what you're telling is correct or wrong. No, I made a mistake. Perfectly all right. Now let us see what we can do with the provisions of this section as it is in the BAR Act, not as you think it is. No, it's not what you think. You might ask me, sir, why are you talking and wasting my time? Correct. Forget company law. Company law is not important because we are having company secretary. He is going to make all the mistakes. We don't have to make those mistakes. Chod dijiye bhai. For final exam, it is self-paced module only. Chod dijiye bhai. But how about income tax? But it is also a law. And you are all going to be claiming to be expert in that law. Many times I have seen people, income tax authorities, not our fellow professionals, because that way chartered accountants are the ultimate expert in taxation, no doubt about it. Any chartered accountant will be an expert in tax. Many times income tax office, they will misquote. Then I'll tell them, sir, you are an officer of the income tax department, sir. I can't contradict you, but I humbly beg you, please read the BAR Act. Okay, Sir Srikanth, you are thinking that you are a chartered accountant, so you will, sir, forget chartered accountant and also. Just read the BAR Act, sir. They will read. Wait, you say so like this. Please, sir. That is what I have learned from the section, sir. The same section you are also going to implement. There cannot be one law for you and another law for me. Both of us have to obey the same law only. My client has to comply with the law which you are administering. Kindly educate me whether this is correct or not. Okay. I will see. I'll pass the order. Thank you, sir. Be humble. Arrogance will never help you. Be humble. Humility is the ultimate adornment for a learned person. If you think you are learned, be humble. For that, one great example I can show in our own profession, Padma Shri T. N. Manoharan. If at all you have an opportunity to meet him, do go and talk to him. Such a great man. Okay? He will be so nice. It's not just humble. He will talk to you so nicely. I have learned from him how to talk to people, how to be so polite and friendly. Even if he is contradicting you, he will do it such a gentle way so that you don't feel unhappy about it. This is one quality which all of us should learn from the past president of our institute, Padma Shri C.A.T. N. Manohar. Moving on to the dematerialized form. I'm sure you are familiar with this. When you come to share capital and debentures, it will be the duty of that faculty to teach you dematerialization. In simple terms, dematerialization is converting physical share certificates into electronic record. Okay, 1996, the Depository Act was formed. From 1994 onwards, NSE came, National Stock Exchange, in a big way it came. Maybe it was established before that, but 94 is when they pushed it, electronic trading and all, because the other stock exchanges were blocking the regional stock exchanges. Finally, the death knell was given. All of them closed, except one regional stock exchange which decided to change its act and became a viable alternative for NSE, which is your Bombay Stock Exchange, Mumbai Stock Exchange, Bombay Stock Exchange, BSE, is commonly BSE, Sensex, and NSE Nifty. So when these two electronic exchanges came, they wanted to have electronic trading. Therefore, the shares cannot be held in physical form. Therefore, from 96 onwards, the depositories were formed. The two depositories, CDSL and NSDL, and the shareholders, the investors were requested to convert their physical share certificates to submit it to the company. Then the company will destroy the physical certificate, and to that extent, 100 shares, 300 shares will be recorded in the records of a depository selected by you. You decide whether it is NSDL or CDSL. You tell us. You go to a depository participant, open a DP account, and then you inform us. the DP account number, surrender your physical certificate, we will dematerialize it and credit your account with 100 shares or 300 shares or whatever it is. Thereafter, it is like electronic banking. Yeah, you just go, sell, transfer from your account. Just like you transfer money through GPay, you can transfer the share. That is the advantage of dematerialization. So, but still, there were people who were, sort of Neanderthals, Stone Age culture. They don't want to change from physical certificate to demat. So slowly, SEBI kept tightening. And now they have very clearly said, when new public offer, then it should be only in dematerialized form. So if you want to subscribe for an IPO, first thing is you should have an DP account. Okay. Now they have said, if you are a listed company, all your shares should be in dematerialized form. 1/4/2019, they said you have to change all your shares, even physical shares. And if somebody has not converted physical shares, that's it. They can't give direct delivery in the market. If they can't sell it, technically they have to come to the company, dematerialize and all that. So, new public offer, it should be only in dematerialized form. No question of physical option. Okay. Whereas unlisted company who's not going public may issue securities in dematerialized form or physical form. But recently they have amended. You'll study it in share capital and debentures. They have said, recently means 2022. They have said even public companies which are not listed should convert into dematerialized form. Okay. So dematerialization is good. Demat is good. In fact, many of you who are listening to me, or most of you who are listening to me, or maybe even all of you who are listening to me, would not have seen physical certificates. Because the last physical certificates would have been 2000. After 2000, physical certificates you would not have seen. But in 1980s, 88, 89, when I began my investing career, it used to be physical certificates. We used to have, my brother-in-law and I used to have a separate record, bureau where we'll keep the share certificates under lock, keep track. And I used to have an Excel spreadsheet only for that, to track our numbers and all that. Sure. And finally, when we sell, we have to do it. All that used to be. And now it's not there. Everything is dematerialized. Simply you go to the DP, press, you will get your statement. How many shares, which company. So you will get your statement. Suppose promoters are making public offer of convertible securities, they should hold it only in dematerialized form. Meaning, suppose they're issuing convertible debentures or convertible preference shares, they should hold it only in dematerialized form. In case they are holding physical, it should be converted into dematerialized form before the date of offer. Not important from exam point of view. Okay? Just information. Important from exam point of view. Okay? Important from exam point of view. Like that. But I'm still covering it. We come to the types of prospectus, right? So we have shelf prospectus, red herring prospectus, abridged prospectus, and deemed prospectus. Before we go there, let me see if any queries are there in the chat box. In case of uniform prospectus, no need to give notice to registrar. You will simply file it. No need for registration. You will simply file it. And the validity is not 90 days. See, that's what I'm saying. Everything will be governed by your SEBI. Everything will be governed by SEBI guideline. No need for thing. Okay. No need for registrar. Okay, Abhijit ji. Thank you. So, since there are no further queries in the query pad, I will go on to types of prospectus. Feel free to put your queries in the chat box. As and when I get some free time, when I'm transitioning from one topic to another topic, I will go to before that, I will take the queries. So, whatever query you have, you put it in the query in the chat box. So shelf prospects. So in your house or wherever you live, PG or whatever, you may be having a shelf where you keep your books, dictionary, company law book, whatever. Whatever you put on the shelf is available to you. Whenever you want, you can go and take it. That is the purpose of a shelf. Okay. So similarly, the shelf prospectus is a prospectus which is available always. It has a long expiry date. Suppose you make food at home, you will put it on the table because the expiry date is 1 day maximum. You can't keep it in the fridge. But pickles and all, you keep it on the shelf. It will be available now for at least 6 months, 1 year. So shelf prospectus is like that. We issue the prospectus once. Thereafter, you can keep on raising money without issuing a further prospectus. A prospectus in respect of which securities or class of securities included therein are issued for subscription in one or more issues over a certain period without the issue of a further prospectus. I'll give an example. It will be easy for you to understand. Usually, shelf prospectus will be used not for equity, but for preference shares and debentures. What we will do, I'll give an example. Sir, I'm going for a project, sir. I've already raised money from IPO, promoter's contribution, IPO over. I've raised 100 crores money. Now I need another 200 crores for the project. This 100 crores I'm raising in one shot, or maybe this 100 crores also I will raise in one prospectus 50. Then 1.5 years later, I may go for another prospectus 50. Doesn't matter. Now I got 50 crores, which I will start investing in the project. Project gestation period is 1.5 years. So if I start the factory building now, it will take me 1.5 years to complete erection, installation and commissioning. Big project, let us say big cement plant, big industrial alcohol plant, boiler will be there. Size of the boiler will be huge. So I have to first of all float a tender, get the expression of interest, then evaluate, then finalize contract, then EMD. So much is there in project management. So minimum will take me 1 or 2 years, 1.5 years. Well, ideally, my PERT chart says 1 year. Probability says 1.5 years, I will complete it. Okay, engineers are given a PERT probability and etc. Boiler is the critical path because boiler, unless it is in place, I can't do anything. Only then I can start my industrial alcohol plant. So whatever it is, but the rest of the things can come, but boiler is my critical path. So boiler plant only I'll be constantly monitoring. The rest of it will be the electrical, all that will come. So why I'm giving all this practical point, I don't need the money in one shot. You are the CFO of that company, you decided. So you have prepared a budget and submitted to the board where you said, sir, we need money now, so much, advance and all. And then we are going to give them EMD and all that. We are collecting EMD and we are going to give them advance and all that. Then this is going on, sir. So we'll be able to generate some money from our other units, which can be pumped in. Public issue money is available. We can use it. So we still have to issue debentures. Banks are also giving funding. But in addition to that, we want to issue debentures. We want to issue debentures for 50 crores, sir. Okay, go. But I don't need the entire 50 crore now. Over the next 1 year, I want it. How to do it? So you're a listed company. So you go to SEBI, submit this shelf prospectus, wherein you will say, we are going to raise money, 50 crore, now only 10 crore. So once the shelf prospectus is filed, it will remain on the shelf. Okay. So this is a convenient when a company regularly makes issue of securities. So now I'm going to make 5 tranches. Beginning with April, I will go right up to December next year. 5 times I will go. Now what I will do, I will issue self prospectus. I need not issue a fresh prospectus for every time the new series is coming. Okay. The company may file a shelf prospectus to the registrar at the stage of the first offer. The validity period, very important from exam point of view. Very important. Validity period not exceeding 1 year. That means you can have less than 1 year, but maximum validity of a shelf prospectus is 1 year. The validity period will commence from the date of opening of the first offer. See, whenever the prospectus is issued, they will clearly say date of opening. That means the subscription list will be opened on a particular date. From that day onwards, applications can be sent, uploaded, money can be paid till the closure of the subscription list. That's all, opening date and closing date. So date of opening, date of closing. Usually they'll give 10 days or 7 days, 15 days maximum for you can check out. Next, you just go through some prospectus recently issued and check out what is the date of opening, what is the date of closure. Within that time, you should have uploaded your application in some portal, either the company or your broker, whatever. Wherever you want, you can go and upload it. If you go through your own share broker, he will get some commission when you upload through his portal. Therefore, he will call you, your relationship manager will call you. Please, are you subscribing for Tobacco Limited shares? Yeah, I'm planning to subscribe. Sir, why don't you route it through our portal, sir? So there you go, then mention your DP account number. Check, that's all over. It will be uploaded. Make the payment through GPay or make the payment through whatever you want and finish it. Internet banking, finish it. Okay. Simple. Sitting at home, aramse you can do this. Earlier, we used to go take the application, go and stand in queue to submit it, check will bounce. Nothing. Now everything is clear. Validity period shall commence from the date of opening of the first offer. Right. So once that shelf prospectus is filed with the registrar, it will remain on the shelf. The shelf prospectus stays on the shelf, as it were, and is always available for the public to view. So I need not issue fresh prospectus. No further prospectus is required during the validity period. But whenever I'm going for a fresh offer, in case there is any change in the financial position, that should be mentioned in an information memorandum. The format of that is PAS2. You might ask, what is the significance of PAS? Usually, form numbers in the Companies Act are usually, not always, usually the first letters of the chapter name. Chapter name. So you have SCD, share capital debentures. Similarly, PAS, prospectus, and is ignored. Allotment, off is ignored. Securities. So prospectus, allotment, securities. PAS. Okay, 2. 1 month prior to every fresh offer. 1 month prior to fresh offer. In case there is any financial, in case there is no change, you will still have to give an information memorandum wherein you will simply say no change, no change, no change. Same figure will come. But suppose you have taken on additional debt, or maybe there is one pending penalty action against you or pending prosecution against the company by the TDS department. Mention it. Because it should contain all material facts regarding changes in financial position. How will prosecution be a change in financial position? Definitely, Baba, I have to make a provision. No? Penalty is there or compounding fee. There is a financial penalty. You have to provide for it. So whatever it is, you have to give all material facts regarding changes in financial position occurring between the earlier or first issue and the current or proposed issue. Right? So basically, the information memorandum is given for disclosure. See, in fact, the legal principle behind prospectus itself is transparency and disclosure. If you disclose, and after knowing that gentleman or lady buys your share, you are not guilty of anything. But if you have not disclosed and they have applied and they have suffered a loss on account, then the directors are guilty of misstatement in prospectus. Later on, when we come to misstatement, you will understand this. So the legal principle here is disclosure. Any applicants remitting subscription money shall be intimated about the changes in financial position. Boss, he has to go and download the information memorandum here. Suppose he comes to you and says, I want to know, I want to apply for the debenture. Kindly give me shelf prospectus. Throw it at his face. Is there any change in? You won't have to ask. If when you give the shelf prospectus, you should give the information memorandum also. It is your duty. He need not ask. Okay. Suppose applicants have remitted subscription money. Thereafter, there is a change in the financial position. Then they have the right to withdraw the application. And the company should refund the money within 15 days. But this is between the date of issue of the prospectus, they have subscribed, then there is change in the financial position. You have to inform. If you have disclosed it in the IM, information memorandum, no need. But after IM, they have given the money. Now, there is a change in the financial position. Then you have to do it. Okay. The information memorandum shall be deemed a part of the prospectus. Deemed. Okay. This deeming is a beautiful word in law. You can take something which is not the fact and then say that is how it's and make it a fact. Once you deem it, okay, deemed. Deemed means it is not so, but it will be treated as if it is so. It is not so, but it will be treated as if it is so. So whenever you see a deeming provision, you have to be very careful. Deeming provision creates a legal fiction. I mean, in this context, it's just a casual word, deemed. So you cannot say, I don't know. It is deemed to be a part of the prospectus. Okay. There are more powerful deeming provisions which create a legal fiction. And when they create a legal fiction, you have to be it should be strictly read. You cannot, already hypothetical. You cannot create more hypothetical situations based on a hypothetical situation. Strictly interpret it. In fact, the other day I was in a social occasion when somebody was telling something and I very casually said, they were asking him to do something he is already not started doing. They want to do something more advanced. I said, boss, there is no hypothetical wife. How can you create hypothetical children? Only wife is hypothetical. How you can create hypothetical children from a hypothetical wife, I say. So, idea is, we are just ensuring that the information memorandum will be part and parcel of the prospectus. You cannot say, sir, shelf prospectus, we gave the, why should give information memorandum? Is it part of it? Yes. Information memorandum shall be deemed a part of the prospectus. Okay. So this is regarding shelf prospectus. Now we'll move on to red herring prospectus. Red herring. Till date, I am not aware why it is called red herring prospectus. I have asked many people because I am a great fan of detective fiction. I read, of course, all the big ones, including Christie, of course, the whole thing. You name it, I would have read the detective story. I have a collection in my library. Out of my 23,000 books, easily about 300 to 400, I mean, more than that, 500 books are crime and detective books. So, why I'm saying, only in detective fiction I have come across the word red herring. See, red herring is a misleading clue. You see, in the detective story, especially Agatha Christie, Rex Stout, and some of those novelists, they will put a challenge to you. When you are reading, they will put a challenge to you that you can also solve it. If you also go through the same procedure, of course, Sherlock Holmes, Arthur Conan Doyle, if you read it correctly and understand it, there's a chance that you yourself can solve the murder. But in order to mislead you, the author of the novel will put certain clues that are misleading. Such misleading clues are called red herring clues. Red herring clues. So, this is what I've understood of red herring. But that has nothing to do contextually with prospectus. Maybe they mean that the red herring prospectus itself is a misleading, but it is not the original prospectus. It does not include complete particulars of quantum or price. So, I'm giving you something called a prospectus. Everything else will be there. All the disclosures will be there, expert opinion, the transparency, everything. Once I read it is like reading a normal prospectus, but it will not have how many shares are being offered or issued and what is the price at which they are being issued. Why? Because the red herring prospectus is part of the price discovery mechanism. The price discovery process. See, sometimes, to explain this, I have to go a little back in financial history and explain to you the context. When was SEBI Act enacted? If it's a normal class, I will get an answer. But the SEBI Act is 1992. Okay, the Securities and Exchange Board of India Act. So SEBI came in 1992. Before SEBI, we had what was known as the Controller of Capital Issues. Okay, so there were very few public issues. And if you wanted to go for a public issue, you have to get approval from the CCA. So the earlier socialistic regime, before Manmohan's liberalization era, was a approval regime, license Raj. So everything you have to go and get approved from somebody, and that fellow got the opportunity to collect a bribe, and so on and so forth. But with liberalization in 1991, the capital markets are also freed. They said, if you want to raise funds from the public, I am not holding you. Go on, issue a prospectus. So no CCA, they scrapped CCA. Instead, they put a regulatory body called SEBI. And SEBI does not permit you. You don't have to get any permission from SEBI, or your prospectus will be vetted by SEBI for transparency and disclosure. Everything should be stated therein. The truth should be given. The whole truth and nothing but the truth should be given. No misleading statements. That's all SEBI will ensure. Then once SEBI is seen it, registrar will go through the company law part of it, the compliance. Then he'll put a stop on it, registered, go. With regard to the pricing, what price to charge for your share, premium, nobody decided it for you. You decide. Now what happens? Sir, I am like a tomato merchant. While pricing the public issue, I have to be like a tomato merchant. See, tomato, suppose by the time I go to market, there is a shortage of tomato. Suppose I charge 30 rupees, then suddenly tomato prices go up. I'm losing. Suppose I charge 40, 50 rupees. There is a huge glut in tomato. Everybody, huge supply. Market price goes down. So the wholesale merchant's dilemma is there. No? How much to price? How much to price? So pricing becomes a nightmare. In public issue also, what happens? You take LIC as a classic example. LIC, when it came, it was grossly overpriced. Market was buoyant, and market players were willing to pay premium, thinking they will pay. LIC came out with a pricing that was found to be overpriced. Therefore, the market reacted. And once the share got listed, the market price was hammered down. So those who purchased in the market at the listed in the IPO price would have lost. That is one aspect. Another aspect, take a company like Videsh Sanchar Nigam Limited, early entrance into the capital market in the early 90s, 94, 95. Maruti Udyog Limited, MUL, now called Maruti Suzuki. 25 rupees per share. Maruti Udyog shares. You don't believe me? Go and check first. In fact, like a fool, I missed that bus. I didn't buy. Maruti Udyog Limited, grossly undervalued. Videsh Sanchar Nigam Limited, grossly undervalued. So it's a double-edged sword. Whether if you go too high, it will be undersubscribed. If you go too low, it may be oversubscribed, and you will lose the premium that you could have got. What to do? Finally, they said, let's include something called book building. So SEBI itself came out with the book building guidelines. They said, look here, don't price it. Assess the demand and price for your security. How? After all, the Aam Aadmi like Srikanth and others are idiots. They don't know anything. Don't go to them. They finally, whatever price you fix, they will go only by the bigger players, what they are doing, FIIs, what they are doing. So they are the qualified institutional buyers now. Go to them. And of course, you have the HNIs, high net worth individuals. Like what is that gentleman who recently passed away? Junjunwala, Rakesh Junjunwala. So these are all people who are big guys, like, they are HNIs, high net worth individuals who have invested in the stock market and made billions and zillions. These people have knowledge. So you prepare a prospectus, do not mention the price band, do not mention the number of shares, send it to them. That is the red herring prospectus, along with a bid form. Now they will go through it, do some valuation of their own, analyze it. And then they will send a bid saying, I am willing to take 10 lakh shares at 1,200 rupees. Like that, you will collect such bids from many QIBs, right? Many QIBs. And finally, you will, based on that, you will have a triangulation, see the highest price bidding, lowest price. Within that, and also you will do a statistical analysis and see where the frequency is higher, density is higher. Okay. Mode is more important for us. Mode. Where is the frequency high? So that would be the most probable price. So we finally, with all this, the final decision, the promoter will be shivering, the merchant banker will be acting very calm, but inside he'll be shitting, because if the price doesn't work, his reputation is gone. Therefore, everybody will be shivering and the price will be given. And finally, the red herring prospectus will be withdrawn and a normal prospectus will be given with the price band and the options. Are you able to understand this? It's a very simple concept, red herring prospectus. So the idea is to say, I have to give you this elaborate explanation. Only then you will understand RHP. See, you have to know the history, how it changed. SEBI came, free pricing, companies made mistakes, how to correct it, go for book building, how to do that through red herring prospectus. So, red herring prospectus should be issued before the issue of a prospectus. Then that should be filed with the registrar at least 3 days prior to the opening of the subscription list. RHP shall carry the same obligations as are applicable to a prospectus. Finally, when you issue the final prospectus, now, if there is any difference in the financial position, any changes, that should be highlighted in the final prospectus. So, in case there is any change, you have to mention it. And then, of course, thereafter it's a normal prospectus. Then God only knows whether you will be able to get oversubscription. Ideally, if you get a decent oversubscription, it is good. Too much oversubscription also, price is low. Rarely you find IPOs getting undersubscribed. But there are. We don't know about them. What the promoter will do is big borrow, steal and apply and close that. Because suppose 90%, you come for allotment, you'll study that. If 90% of the issue amount is not received within 30 days, you cannot make an allotment. You have to give the money back within 15 days. So to avoid that, they would only spend to the project. Now, so they need all that is all sad story. Very sad stories of companies which were not subscribed because of the valuation issues. And then they themselves have to, some public will come, some 30% public will come. Balance, the promoters will go to lenders and borrow and invest. Such a company doomed to fail, starting with this type of a bad thing. Okay, we'll finish the types of prospectus and have a small break. Two more are there. Abridged. No, we'll come to finish abridged and then we'll have a break. Then go for deemed. Okay. So, abridged prospectus. The word abridged means made small. Abridged means made small. Suppose, I'll show you. This is Anna Karenina. It's a novel by Leo Tolstoy. How many pages? 800 pages. 800 pages. No. I'm slowly reading it. I finished about 500 pages. But the point I'm making is not everybody will have the patience to read Anna Karenina. Therefore, for the benefit of those people, of course, the story can be told in simple terms in 100 pages. There is a lady, she falls in love with a man, married lady, she runs away with him. What happens to her? That's all simple, one story. But the way in which Tolstoy writes is different. Point I'm making is summarized version. So that 100 pages or 150 page version is called abridged version. So that can be given to school children who can get the benefit of Anna Karenina's story without reading. But today, we got a better way of doing it. Nowadays, I don't read many of these bulky novels. Instead, I see if they have been made into movies and I watch the movie. It's as good as an abridged reading, an abridged version. Of course, sometimes in the movies, they make changes in the storyline. That is there. Anyway, that's a larger discussion. I don't want to go there. Point I'm trying to make is abridged. So, Sir, I am busy person, sir. I have office, give this, but you want me to apply for IPO. When I will have time to read all this, Mr. Srikanth? Make it small. Okay, therefore agreed. Along with the application, you give 1 page. Okay, so a memorandum containing such salient features of a prospectus as may be specified by the Securities and Exchange Board. There is a format for the abridged prospectus in which you have to give the details. So idea is you are in a hurry. You can quickly glance at it and form a generally good opinion about the company. All the important highlighted issues will be covered. So every application for subscription of securities should be accompanied by abridged prospectus. Exception, bona fide invitation for underwriting. Where there is no public offer, you need not give abridged prospectus. And when you are only sending an invitation for underwriting, see, you are sending to underwriters. To them, you need not send, application is sent to the underwriters for underwriting. They agreed to underwrite. Now they have to apply. Those applications are sent to underwriters. So there you need not give abridged along with that. See, this again has a very, very funny background. Initial stages before digitalization, before the digital revolution that you saw post 2010. See, 2000 to 2010 was one level of growth. 2010 to now, the change has been rapid change. See, in 2004, the Greaves Cotton Limited called me in 2007 and they said, Mr. Srikanth, we want you to conduct a program on change management. So 2-day program I designed for them on creativity, change management, etc. They were happy, went off. Then 4 years later, they called me. Srikanth, sir, we want you to do change management program again. Chalo, no problem. But sir, only one request. Our MD told, don't call it change management. You have to call it rapid change management. Rapid change. So within that span of say 2007 to 2012, 5 years, they have stopped calling it change. It is called rapid change. Friends, you are living in an era of rapid change. Change is happening not once in a month or once in a week. Every 2 days, something is changing. Of course, you cannot keep yourself updated, but you should be ready for anything. Ready to update. See, to 2020, you said new normal, corona, everything will change. Mr. Srikanth, all of us will be working only from office, sir. Like that, you told. I didn't believe you. Then after that, you said you all went back to office. Now, sir, we will all work only from office. I didn't believe you. What I expected was a hybrid culture, which will be neither office nor always from house. Hybrid. So, I am now adapting myself to a hybrid life where neither this nor that. No extremes for me. Everything is acceptable. Everything is correct. Only then you can survive in this rapidly changing world. Okay, I make this point because of what happened was in 90s when the prospectus was to be issued, SEBI came out with the rule that said every application, a prospectus should be given. Sir, a prospectus is 45-50 pages, Baba. How can I give for each application? So the merchant bankers, category 1 merchant bankers went to SEBI and said, sir, it is not possible. The printing cost will be prohibitive. So then only they said, okay, you print an abridged prospectus and perforated sheet, you attach it to the application. They said for every application, one abridged prospectus. Then we again went and told, sir, even that, the printing cost will be prohibitive. What to do? Then we said, sir, 2 applications, 1 abridged prospectus. So that continued till almost 2011 or 12. Thereafter, SEBI made it compulsory that all communications from company to shareholder will be done only through email. Email given in the email which is given in the DPR. So that designated email only you will get. So now that everything can be sent by email, now I have no problem, boss. I can send you the entire prospectus in PDF form. But still, they make abridged prospectus also. If you want, you can download the abridged prospectus also. Or you can download the full prospectus also. Because both are available in PDF form. And we can also send it to you by mail, whatever you want, in PDF form. So now there is no problem. But in those days, this became relevant. Abhito, it's not so relevant because nobody prints it anymore. Printed prospectus, rare. We may print about 100 or 200 of maximum 1,000 to circulate. Everything, it's all available online. Go to SEBI website, NSE website, wherever the listing is going to happen, Company Ka website, moneycontrol.com, anywhere you go, Tobacco Limited prospectus, immediately you can download it. Go through it. See what all nonsense the company has been doing, how the promoters have always been cheaters and frauds. In spite of that, somebody will write in the Business Line or Times of India, Tobacco Limited is worth looking at. At this price, there could be marginal gains for non-risk averse punters. Like that, they will use superb words in English so that somebody will read it and think Tobacco Limited is a good company. They will buy. They will not read the prospectus. They will read what is written in Times of India and subscribe. I'm telling this because later on you'll come to protection of these days. Misleading statement and all. Who can protect? Nobody can protect a man from his own greed. Nobody can protect a man from his own ignorance. Okay? All hatred is because of fear. All fear is because of ignorance. And the only cure for ignorance is knowledge. Today is, in South India, we call this Ayuda Puja or Saraswati Puja. 9th day, Navami of the 10 days of Dasara is dedicated to Goddess Saraswati. And on Navami, we perform what is known as Saraswati Puja. So in fact, on today, we are not supposed to use any of our books. We are supposed to give rest to our writing instruments and all. Not possible. Today there's a class. But let me praise Goddess Saraswati of learning and assure you that all hatred of anything, if you don't like company law, it is because of fear of company law. All source of fear is ignorance. And the only cure for ignorance is knowledge. So jump into the subject, start studying it. Suddenly the knowledge will start coming. Then liking will start coming. Hatred will go. Fear will go. Then hatred will go. Then you will become an expert in the subject. Do this for all the subjects. You will get all India rank in the examination. Okay. So before we go to deemed prospectus, let me see if you have any queries. There are 5 queries. Let me take them. Abridged. See, nowadays they don't have to publish it in the newspaper, sir. Instead, they will have to put it up in the website of the company, SEBI Ka website, NSE website and all. That is more public than newspaper. They don't put it in the newspapers. Okay. So to my knowledge, they don't publish it. If you want to publish, go ahead. Because the listing cost has to be kept as low as possible now. So they don't list. I'll be taking up some case laws where what is the misstatement in prospectus we will see. So there are case laws where statement was, see, if you give an erroneous statement, no. But if a statement is not material, we'll come to that. There is case law. See, where the statement is not material, where you have made a statement in passing, and nobody gave reliance, cannot be missed. But if it is erroneous or wrong, no way the company can win the case. They'll be guilty of misstatement. But SEBI does a lot to avoid that. Before issue of prospectus, SEBI vets it and sees to it that any erroneous or misleading statement will be removed or changed. Or if you refuse to do it, they will say, put a risk factor there. In the risk factors, you add one more statement. The statement made above is only probable and may not be true. You have to put it. Automatically, somebody reading the risk factor will go and write out. So rarely this happens in India now, but it's still, if it is erroneous, no. But if it is not material, there's a minor error, you have a chance. Okay. So I'm humbly requesting that there should be a small break. Now the time is something like 12:50. Let us have a break till, shall we say, 1 o'clock. No, 12:55. 12:55. 5 minutes. Okay. Sir, small break, sir. Okay. I'll be back at 12:55. Kindly don't go away. Welcome back from your well-deserved break, I'm sure. And let us move on to the last kind of prospectus. Why I did not start this point was because I cannot rush over it. Exam point of view, very, very important. From the exam point of view, very, very important. Okay. Deemed prospectus. See, sometimes certain things are there to prevent. If they are not there, the prevention will not be there. Please understand. You should not ask, sir, has any company issued a deemed prospectus? No, that is not the point of section 25. The point of section 25 is to prevent people from circumventing or discovering loophole in prospectus provision. What is the purpose of prospectus 26, section 26? To prevent a company, to giving all sorts of statements, unsupported statements. Okay. Now, only if the company issues it, it becomes a prospectus. Either the company issues it or the promoters are doing OFS, then they are also having the same liability. If the company or the promoters are not issuing, suppose the prospectus is not, suppose a document is being sent, a letter is being sent by an unconnected third party, how it can become prospectus? Right? We will ask. So that logic will be used. Sir, how can you say prospectus, Your Honor? After all, that document was not sent by me. I allotted the shares to that fellow. Then he sent the letter. So that is called issuing house. I'll show you a diagram. So that is called issuing house. See, what happens is the company is here. It allots shares to a person called issuing house, like an agent. Now, thereafter, the issuing house sends all sorts of Dubakur letters to the public, claiming all sorts of, making all sorts of claims. Right? So the issuing house comes in between the company and the public. Right? So the document containing offer of securities for sale will be a deemed prospectus. Now we understand the word deemed now. It is not issued by the company. The purpose is not to get application. Rather, it is offer for sale. The shares are being sold by totally unconnected party. The company has allotted securities, but the intention of the company, with a view that all of these securities or any of those securities will be offered for sale to the public. So at the time of allotment, company is having in its mind intention that the issuing house, I'm using the word issuing house, it's not used in the section, I'm using it for sake of convenience. The issuing house will make an offer for sale to the public. Such an offer for sale will be deemed to be a prospectus, provided the intention was that it will be offered. How can I find out intention? See, intention is in the mind. See, I'm going on the road, I'm just casually going. How can you know that I'm a terrorist? No, sir. The way you are walking itself, you know you're a terrorist, sir. Your intentions are clear, sir. How can you say that? Sir, we can't tell all that, sir. You'll be arrested, then we will talk, sir. So you can't do like that in a democratic country, my dear friends. So there should be a legal framework which creates it. So that legal framework is section 25. It says, how do I know your intention? I'll tell you. You allotted the shares to the issuing house, and I'm able to show that the offer for sale was made within 6 months after the allotment. See, suppose you allot shares to me in your company. I hold it for a long time. Then I want to sell it and I send letters to my friends saying I'm willing to sell all my shares in Dubakur Limited. And my friends buy from me, no problem. But here what happens? Allotment is made within 6 months after the allotment itself. Offer is being made to everybody. So within 6 months, maybe 2 months later, 1 month later, or maximum 6 months. 6 months is given as an upper limit. It could be even be 15 days later, 1 month later. I took the allotment. Immediately, I started sending letters to my clients. I'm a broker. I start sending letters to everybody. My dear friends, there's a wonderful opportunity for you to invest in Dubakur Limited. The company is going to manufacture petrol from something, leaf, and it's all wonderful technology. It is innovative technology. All those new words are there now. What is that? Renewable energy, sustainability. All those words we use. And if you invest in the company Dubakur Limited, you are not only going to get a huge return on your investment, you are also going to be an environmentally responsible person. So all sorts of nonsense I write. And then I send it to all my clients. Then the clients also see, they call. Then orally also I make all sorts of claims. Buy it, sir. What's our premium is there? 300 rupees premium. Is it worth? It is all worth, man. If you want to buy. Otherwise, it will go away. So like that, that type of hardcore selling will be happening. When is happening? Within 6 months after the allotment or agreement allot. Or, okay, sir. The offer is being made after 6 months, sir. 6 months and then 5 days later I do it, sir. Wow. Then next question. At the time when this offer was made to the public, was the entire consideration, the whole consideration received by the company? No. I paid only 2 rupees. They allotted. And once I sell, I will pay. So now you are got. Your intention was that you won't pay. You will take it. You will get it allotted to you. Then you will make all sorts of false claims using this communication. And then you will sell. And then you will collect the money and pay to the company. Is that the idea? Then that again, the intention is clear now. So any offer for sale to the public by an allottee of securities, a person to whom securities have been allotted, is making an offer for sale to the public. Such an offer will be deemed to be a prospectus if it is provided. The intention is that it will be offered. The intention, the presumption as to intention or eventual offer will be either this or that. Please, my dear friends, very, very important. I wish you could be more interactive in query pad, no? Then I'd have asked you, what is the significance of the word or? Or means any one condition can trigger, whereas and is restrictive. It should be made within 6 months and the whole consideration is not received. Only then it will be deemed prospectus. Suppose I make it after 6 months, not deemed. Suppose money is fully received, even after within 6 months, no problem. No, it is or. That means if it is made within 6 months, straight away deemed prospectus. If the consideration is not received in full, deemed prospectus. So this is a kind of diagrammatic thing. Some of you may find fault with the diagram. Again, I'm going by this average student's approach. See, this topic possibly online, this particular prospectus allotment, maybe I'm teaching for the 7th or 8th time. Maybe not 10th, 8th to 9th, less than 10. Okay, time. So many of the queries raised by students are, I remember what they will raise. So some of you may find fault. No, you should find fault. There is one analytical approach is the hallmark of a CA student. So kindly put it in the chat box and I will answer you. Basically, let us look at the format. You have to keep asking questions. Has the allottee sold shares to public within 6 months? Allottee means the person to whom the allotment is made, this guy. Has he sold or made the offer to the public within 6 months? If the answer is yes, straight away it will be a deemed prospectus. Straight away. Okay. Now here you say no, he has not sold it within 6 months. It is after 6 months. Then you have to ask another question. Has the allottee paid full consideration to company before offer for sale to public? Then, if the allottee has paid full, yes, then it is not a deemed prospectus because it was made beyond 6 months. Answer here is no, and answer here is yes. Then not a deemed prospectus. It was done beyond 6 months, and allottee is paid in full. No. If the allottee is sold within 6 months, has the allottee paid full consideration to company before offer for sale to public? Answer is no. Then deemed prospectus. See, friends, these are alag independent. But for the flowchart purpose, I'm putting it like this. You got it? If you reverse it also, same logic only. Has the allottee paid full consideration? No. Then no will take you to deemed prospectus straight away. Yes will bring you down. Has the allottee sold shares to public within 6 months? If the answer is yes, then it will take you to deemed prospectus. No, not a deemed prospectus. So this will become yes, this will become no. That's all. This will become no. If you alter this, then some changes will be there, but the format is still the same. It doesn't matter. This doesn't make it and. Please don't get confused. It is still or only. Because the minute this is satisfied, straight away I'm taking you to deemed prospectus. Straight away. I'm not even examining the second part. But since you're saying no, I'm examining the second part. I'm asking, okay, it is beyond 6 months, but has the allottee paid full consideration? No, then it is a deemed prospectus. If it is paid, then it is. So, to my knowledge, the flowchart is correctly prepared, logical. If you still have some doubts, kindly ask me. It will be my duty to answer you. Okay. So, deemed prospectus. What happens if it is a deemed prospectus? Provisions of section 26 as to content of prospectus will apply. That deemed prospectus should comply with the requirements of prospectus in every way. It should be compliant, signed, consent, expert, everything. Which means what? Nobody will try this stunt here. That's all. Nobody will try this stunt. Because if they try, what will happen? They'll be caught. And as well go for a normal prospectus. Why go through this useless route? So the only way you can escape is make the allotment 6 months later. Make the offer 6 months later and ensure that the entire amount is paid in full. Who will do that? Who will take the risk of paying you in full? Okay, which broker will do it? If they do it, they will charge a high price. So high commission or fees. So better you don't, yeah. So okay. See, more thing I'll tell you, even at the cost of irritating and boring you, ethical behavior is also profitable behavior. Unethical behavior is always unprofitable in the long run. Whatever gain you made through your unethical behavior, in the long run, you will pay 4 times that much in terms of financial penalties, in terms of shame, in terms of losing family life. That is why all my clients, when they come to me, sometimes they come to me from other auditors. I tell them, you have to comply with the law. Then I can take your file. They come to me and say, sir, we heard about you, that you will only see clients who are honest. That is why we are coming to you. We want to become honest. We have been made dishonest by our earlier consultant. We now want to be honest. Kindly help us. So I give them, baptize them, and then from now on be a good man, and I take them. And I be honest. And 3 years later, they come to me with huge turnover, profits, and they say, sir, but now we know the value of ethical behavior. Now we know how much benefits are there in being ethical. In fact, one client openly told me, sir, we are 3 brothers. Anytime we want to travel for foreign tour, we are earning in hundreds of crores. Anytime we want to go for foreign tour, only 1 brother or 2 brothers can go. One brother has to always sit here watching the employees because we are doing unethical behavior. So we came to you 3 years, everything is clean. Everything is pakka. My employees are handling. All of us went out for a foreign tour. The entire 3 brothers, family, father, mother, everybody went for a foreign tour, sir. In our family, this is the first time. For this, we thank you. That peace of mind, my dear friend, can never come with money. Money is definitely needed, but the peace of mind cannot be purchased with money. Okay? I do agree that this is unwarranted comment by me because after all, I'm here to teach you company law. After all, I'm after all a teacher paid to come and teach you company law. No, I'm a senior member of your profession. The profession to which you're going to join, I'm a senior member. It so happens I'm a teacher of company law, but I'm a senior member of the profession using this opportunity to address budding members of the profession and telling them the benefits of ethical behavior. That is part and parcel of becoming a CA. As part of it, this is not a college. This is not some university. where professor will come and just for the salary is receiving, he will teach and go. We are not teachers. We are professionals who are teachers. Our goal is not just to teach and make you pass. That we will do. But going beyond that, see, my teachers like C.A.R. Bhupati, past president of our institute, C.A.R. Shivakumar, C.A. Pattabhiraman, they were all people who not just taught the subject, they taught ethics. C.A. Gurraj Upadhyaya, Central Council member, they just didn't teach subject. They taught ethics. They taught practical aspects of the subject. Okay, so that is the goal. So don't treat this like a college. Treat it like a professional institute that it is. And remember that in profession, seniors have a lot to share beyond, subject. In case of Dean Prospectus, the company does not want to issue prospectus. They are trying to circumvent it. That is why they are doing it. Because if they issue prospectus, they have to tell the truth. They don't want to tell. That is why I said, don't ask this question like that. See, this fellow is Dubakur Limited. Everything is Dubakur. Dubakur means, I don't know, this is a common word across India. In South India, Dubakur means cheating, fraud, or not what it is, what it is claimed to be. So this company is not a good company. Such a fellow, how he can issue prospectus? That is why he is trying to go through this route. Therefore, to prevent him only, we are having this provision. So to my knowledge, such company will not issue prospectus. They are trying to circumvent it. We are preventing it. Okay? I hope somehow you have to understand this point, my dear friend. I hope you are clear now. This section is meant to prevent a person who doesn't want to issue prospectus, wants to use a wrong route to go there. We are blocking it. This is a preventive section. So such a company, how will they issue prospectus, you tell them. But if since this section is there now, such a company has to go for prospectus. If they cannot draft the prospectus and convince the public, every office in the body should be kept closed. Don't access the public for funds. You have no business to go to the public for funds. You are not a worthy company. Don't go there. That is a message loudly given by Section 25. But unfortunately, in the current market scenario, with the market booming blindly, you are going to see every type of unfit company coming out with IPO. Believe me, the bonanza has not yet started. 2026 is when it will start. 25 end, 26, 27, peak. You will see every Tom, Dick, Harry will go for IPO. Every nonsense fellow will go for IPO. People who have no business to go for IPO will go for IPO. The public also will lap up those issues, purchase, because there will be a big appetite for new companies because all the existing companies would have reached the peak. So here, when they see new IPO, IPO I'll buy. Dubakur Limited also will quietly sneak in that time. And they will also get prospect. Okay, I hope I have communicated this. The gentleman who asked the question, I hope you are clear. Okay. Got it. Abhishek Singh. Oh, there is one more. Abhijit Chaudhary. This is Abhishek. Okay. We also have Aishi. Nice to see all of you. Krishna Om Gupta. Om Gupta. Okay. Hari Om Gupta. Okay. I used to know one gentleman called Hari Om Gupta. Okay, moving on. There's a small test question here, which could come in the examination. Capricorn Limited allotted 10 million shares of rupees 10 each to Silver Tongue Financial Advisory Services Limited, Private Limited, at a premium of rupees 25 per share on 5/2/2020. See, dates are a little old, no problem. What is there? If you change the date, nothing. The content is more important. Suppose they make this 5/2/2024. If it will make you happy, I'll do it. But in the exam, if they're giving it, they'll change it and give. Don't worry. By the time when you write the exam in January or whatever, whenever you're going to write it, they will change it to 2024 or whatever, 25 or whatever. Okay. So Capricorn Limited was paid the entire consideration of 350 million. How 350 million? 25 plus 10, 35 into 10, 350 million. 350 million on 15/2/2020. Silver Tongue Financial Advisory Services Private Limited made an offer of the shares allotted to them to the public on 1/8/2020. So Capricorn paid the entire consideration on 15/2. The allotment was made on 5/2. The offer to the public was made on 1/8 by sending a letter of offer on their letterhead, making tall promises about the future. Tall promise means untruthful. Tall promise is an idiomatic statement, may untruthful. Okay? Statement. Jhoot bola. So they are telling lies about the future performance of Capricorn Limited. Okay. Is this letter of offer deemed to be a prospectus? Will your answer be different if the offer is made on 15/8/2020? So what you should do? First condition. So if you reverse, also no problem. First question, has the allottee paid full consideration to the company before offer? Yes. Then move on to, no, don't take a decision. Has the allottee sold the shares to the public within 6 months? If the answer is yes, also deemed prospectus. Okay. So 5/2/2020. So you'll have to calculate, check out. Can you do it? Whether is it less than 6 months or not? Anybody can give the answer in the chat box. So if I start counting from 6/2, okay, let us see. I'll use a calendar, that's easier for me. February. This year, February is a leap year. Huh? 2020 was also a leap year, I think. Am I correct? 2020 was a leap year, if I'm right. Let us see if they have answered now. Sold within 6 months. So this is deemed prospectus. Swati says no. The whole thing is hinging on 6 months. Let me count. 5, 20, 21, 22, 23, 24. 24 days in, 24 days in February. Then 24 days in February plus 31 plus 30 plus 31 May plus 30 in June plus 31 in July, 177, another 178. 178 days, less than 6 months. Therefore, though the consideration has been fully received, see, either or, even if one condition is satisfied, it is a deemed prospectus. Here, the full consideration has been received, but it has been there. But there is a, what shall I say? There is a within 6 months. Therefore, it is a deemed prospectus. Will your answer be different if the offer is made on 15/8? Yes, it will be different because 15/8 means more than 6 months. Consideration fully received. Capricorn Limited, Silver Tongue Advisory can go for public offer. That public, if it is made on 15/8, then that letter of offer, that offer letter, need not comply with the requirement of deemed prospectus. It need not comply with the requirement of deemed prospectus. But if it is 1/8, sorry, it is a deemed prospectus. My dear friend, Mr. Sai Kiran Kumar, asking, is it off-market sale or online trading? It doesn't matter, sir. Even if it's online trading, it will be covered. So long as you are making an offer of sale to the public, how you actually effect the sale? Whether you do it through off-market or through online trading, it does not matter. To answer your question, it does not matter. It can be off-market, it can be sale. It could be off-market, in which case we will give you depository advice. It will come to your thing. Doesn't matter. Correct. Abhishek Singh gives the right answer again. Except Swati ji. Swati seems to have a doubt. So I humbly request her to relook at the brochure. Okay. $178 today, correct. Not it. Lamia Ria is also saying not. No, it is a deemed prospectus because though the consideration was fully received by the company, the offer was made within 6 months from the date of allotment. Therefore, correct. So you're right. No, be careful. These are alag conditions, either or, either this or that. Okay. So be careful. In the exam, they could ask you a question from this. It's an important from the exam point of view. So be thorough with the concept. Plus, what is there more to read? You know, I taught you. Basic principles are there. Remember it. Exam hall, go there. If you get a problem, say hallelujah and write it. That's all. What more? You get full marks. How to write? I will spend about 3 minutes before we close this session. Now it's exactly 1:25. Let me not go on to the what does it make difference? Boss, suppose it's a deemed prospectus, this fellow that Silver Tongue should ensure that that entire document is complying with section 26. It should be in the format of the prospectus, including registration with the registrar, blah, blah. Whereas if it is not a deemed prospectus, you can go naked. Nobody can catch you. Write whatever you want in it. Okay, that is the difference between deemed or not deemed. That's what they told now. So that is what they told here now. Deemed prospectus will, the provisions of section 26 as to content of prospectus, etc., will, including registration, blah, blah, blah. Everything will apply to the document containing offer for sale also. Okay. So, as I told you, when you're writing an answer in the examination, especially a theory question answer, please ensure that first you will briefly represent the facts. Capricorn Limited, rather you put it this way, Silver Tongue Financial Advisory Services Private Limited, the allottee of 10 million shares by Capricorn Limited has made an offer of those shares on 1/8/2020. The entire consideration for the shares was paid by Silver Tongue on the date when the offer was made. Okay, that's all. Facts are over. Then write section 25. This slide and this slide. Don't put the diagram. No, don't put diagram in the exam. And consequences. Then you write from the above. In fact, you need not write consequence also because they have not asked you consequence. They only asked you, is it deemed or not? Okay. Then you apply the law to this fact, wherein you say, although the entire consideration has been received, it is seen that the prospectus is issued on the 178th day, which is less than or within 6 months from the date of allotment, that is 5/2/2020. That's all. And then conclusion. Therefore, this letter of offer shall be deemed to be a prospectus. Then, in case the offer is made on 15/8, it will be made beyond 6 months. And since the consideration has been fully paid, if the offer is made on 15/8, it will not be deemed to be a prospectus. If you write in this way, my dear friends, you will find you are able to get minimum out of, say, this question carries 3 marks, you get 2.5. Sure, 2.5. If your writing is neat and you're able to write well, 3 on 3, scoring marks. Okay. So this is my humble submission to you. So, see, though it is 6 months criteria, there's, you are right, sir. No need to count because, you are right. You can go by, no need to count, correct. No, absolutely correct. You are quoting correctly from the, what is that, General Classes Act. When it is in months, you need not count days. Still I counted days. See, 6 months will get over on 4/8/2020. March, April, May, June, July, August. 5/2 na. Therefore, 4/8 midnight. 6 months will get over. So before 4/8 means automatically it is. You're right, sir. You're absolutely correct, my dear friend. We need not count dates. So, correct. Abhijit ji, you're right. We need not count dates. Sorry, I counted dates. But since it's month, you can take date to date. So, 5-2 means 4-8 straight away. Though February is a leap year, it doesn't matter. It's a leap year and February has 29 days, it doesn't matter. But it so happens, even if you count days, it's less than 180, which is 6 months. You are right, sir. Thank you for that. See, these are the type of small things, I'm happy that you are noting. This is the level of expected by the ICAI. Sir, if any company director liable for any penalty, then who will impose punishment? See, at the time of audit, if you come across any violation, you will qualify your audit report, but the punishment will be done by MCA only. Company or director will be punished by the Ministry of Corporate Affairs. Who will report it? Ideally, at the time of audit, it's a duty of the chartered accountant auditing the company to report the non-compliance with the section. Okay. At that time, they will read the annual report and take action. Read the audit report and take action. That is how it has to be done. Okay. Fantastic. I'm really enjoying this session. Your interactions are wonderful, and I would love to continue this session. But unfortunately, the time now is 1:30, when possibly you are having some other session also. So next class, we'll take up variation and all that and finish the topic prospectus and allotment of securities. Right, sir? Wishing you all a very great day and success in the examination. Inshallah, we will meet on Sunday at 11 a.m. sharp. Bye. Thank you. Thank you very much. Bye. Sir, class over, sir.